Hey guys, how are you? Happy Wednesday. Beautiful sunny day here. Please give me some okay that you can hear me. Vladimir here, of course. And we can start. Just give me some okay. Perfection. Thank you very much. So, let's go over the market and see what do we have, what trades we have running, what's developing, and what's added to the list. Hello guys, hello, thank you very much for your verification. All right, so let's start with the things we have going. Just quickly, for all those who watch us for the first time, first of all, welcome to the family. Please make sure that on the trading report that you receive, you make sure you watch this video, how to use the trading report in your favor. Trading report you would receive after the live trading room recording. Make sure at your own comfort, as many times as required, to watch the suggested webinars so you understand the terms we are working with in the live trading rooms, in the reports, and how our ideas basically shared. Okay, so let's start. OZCAD, the first one. We broke the trend line, and our expectations are for the move upside based on the daily divergence, right? We expect a reaction from this magnet zone of the cycle. Quick look, we can see that we got a reaction. Now we are facing some slowdown, right? As you can see here, two waves here, slow but still, with some bearish divergence against us. And you know my personal view, once such things come in play, this is a sign from the market that we should listen. Does that mean that we necessarily go to new low? No, it doesn't. But remember, daily was the bullish divergence, so 4 hour could be two waves, which it kind of has for us, small, but still, or a ranging correction, and that could go for a wider movement. This or other way around, it is not a sign that we are necessarily going down. It's a sign that management is important. Management could be just drop the exposure, could be take partial cash out, could be move stop loss to break even, or any other combinations of the mentioned before. Okay, but once the market gives the sign, we have to listen. And this is the Aussie versus the Canadian. Important update. Euro versus the Aussie. After the convergence we got on the previous week, our plan was sell the rallies. One of the opportunities arise with the break. Oh, sorry, bad drawing. Comes with the break of the trend line. So this is just one way, of course. This trend line was broken before. Our view remains bearish. Want to remind you, according to the cycles, we expect two waves on the 4 hour chart or any kind of a range. So both possibilities are totally fine with us. Sell the rallies was and remains our plan. Euro versus the pound. Break below the trend line should give bearish signs. Now this is the critical area. We are dancing around the same 0.90. So not much happens with the euro versus the pound. It is still in the same area, same zone, doing basically nothing. So the view remains bearish. The daily divergence is there, the 4 hour divergence is there, the weekly divergence is there. We need to gain the momentum by making new lows, lower lows. At that moment, until now, it did not happen. This is the most recent trend line for all those who are not involved. This, though, is still the most recent low to be broken in order to start the movement down. The alternative, of course, as always, triple lower highs, triple lower lows, and then looking for the sell setup. So the view remains bearish, and and the setups are followed accordingly in this direction. Euro versus the yen, the 4-hour chart, bullish after the trendline breakout. Euro yen, here we go. So we got a trendline breakout and we got the higher highs. For all those who missed, we got a retrace, bullish hidden divergence, classically verified by the 1-hour chart, two waves, and a breakout. Bullish divergence here as well. That's normally the best combination and a flow of decisions we have. I'm talking about cycle divergences on all the 3 time frames. Double bottom from the daily with bullish divergence, the fact that daily breaks through the trend line, the 4-hour chart which gave a trend line breakout on its own cycle and higher highs. Now it also makes higher lows, bullish hidden divergence. That's the situation where we say ask no more, the view remains bullish, and a quick reminder, we expect 2 waves or a range. So as long as this did not become a divergence, there is no reason to go and fully cash out. The view on the euro versus the yen is still bullish. Euro Kiwi is one of the best payments we have so far. Our expectation was bearish after this convergence. We got the rally here. No real signs besides the convergence and the retrace. So nothing was really new in terms of entries, and just got a straight continuation. So convergence, retrace to the middle, a bit more in that case, holding this resistance area, some sort of hidden divergence, and a continuation. What's next with this pair? I still believe we are going lower. This is a triple cycle or double in any other case. So we want to see here some sort of movement or in 2 waves. I still think there is room to go further, and I believe any retraces are still for a sell. For all those who are not part, SPT to the rescue. At that moment, the daily is still bullish. I believe on the coming day or 2, this should change. And then as closer as we get to the cloud, assuming this 2 remains red, this is a good place to look for the continuation. Okay, so any questions so far, guys? If there are, please feel free. I just quickly go over the things we discussed and the trades as we are following them. Okay, euro dollar, we are bullish, not much changed. That includes it today, of course. The view still remains on, and we are heading towards 116. Okay, daily still nothing against, only potential, so the bullish pressure remains on, unchanged. That's for the euros. Pound versus the Aussie was our plan to go look for sells after the break of the trend line. We got our breakout, and so far so good. We have the lower high, so our protection is right here. As long as it remains below, our plan is still bearish. Remember, we are heading towards the daily 2 waves or a range. It looks like it develops 2 waves. If so, the levels according to the waves, to the 2 waves, should be somewhere around the 180 and possibly further on towards 176-ish. Okay, so our bearish view remains on. Let's move on, guys. Our next one is the pound versus the dollar. Now this one is unchanged. Broke, still doing nothing. A bit up, a bit down. Nothing changed here. Nothing to be updated. A 4-hour chart starts to prepare here this bullish hidden divergence, and this becomes as a very nice holding area. We can have a look for further rallies in such. That's for the pound. New Zealandian CAD, we are bullish with the break of the trend line. We got a beautiful move here. Now, partial cash out comes in play. 2 waves to the upside, divergence against us. As always, do not let a winner turn a loser. Is that a sell continuation plan? No, the daily is not ready. It's yet bearish. We do not have lower lows. We don't have any trendline breakouts, so the correction idea still remains on, of course. It might be anything like that. So that's why only partial, no need to go deeper than that. And as long as the last low hold, the view still remains bullish. New Zealandian dollar, basically a bullish run is expected after the double bottom. So again, not much change since, we just continue in this direction. I believe that these areas would start to make some pressure here. We should be facing some possible retraces to happen soon. Very close areas that we are facing here. Okay, this is a pretty serious magnet area. Divergence is building up against us. 1-hour chart starts to show possible verification for this divergence. So I still think it's to the upside. Short-term retraces are acceptable. They are not at that moment trend changing signs. Only possible retraces. For all those who are involved, enjoy. Nothing else I can say here. And the dollar CAD, the trade of our months, we got it right here a week ago with the bearish hidden divergence spotted on the 4-hour chart right after the daily convergence. It was an amazing trade which is still running right here. That's about 400 points already, which makes it amazing. And as per our expectations, the further level is around the 130, the psychological 130. At that moment, no signs against. The structure of lower highs, lower lows continues. So I believe the pressure is still on. Yes, I think we can start to see some slowdown here. And as closer as it gets to the 130, and let's put the lines here, and by the clearance of several stop losses areas, as closer as we get there, that's the place where we would be cashing out. At that moment, again, nothing tells us get out, so we don't. Holding the sell, and that's going pretty beautiful. Dollar versus the yen, another one that we have been writing down. As explained on Monday, we were expecting a new low until the divergence completes. So let's take a look. What did we have here? This was our trendline breakout. We expected a new low, and we got a new low until the divergence completes. At that moment, we get a horizontal false breakout. 2 candles rule are in play right here. Beautiful divergence. Also triple spot on the alternative divergence, false breakout. So 2 false breakouts on a magnet zone. What is the magnet zone we are working with right here? We have this first leg bringing us towards the 100 and 61.8 of the second leg. Beautiful area around the 107.50, which is a psychological zone. and this is a bullish divergence. Now also starts to show on the moving averages. So the way it looks right now, we have a great opportunity for some rallies to take place. Since it's only one false breakout and attempt for higher highs, the best thing here would be to go and wait for the trend line to be broken, and then look for buy retraces. This trend line is basically synchronized among the time frames, daily and 4-hour chart. Break above that could open the doors for bullish setups with retraces. So watch this out. It looks good. And the most important thing here, we are done with our sales. Okay, it was a great trade. Enjoyed it. Game over. Would be looking for next opportunities when they come. At that moment, a bullish one arrives, and with the break of the trend line, we can start talking about buy retraces with bullish evidences. So that's for our trades and positions as discussed. One that failed was the pound versus the Canadian. That trend line was broken to the upside right here and failed. So this is a fake breakout. Now we have a low invalidated. Does that change our plan? No, this is still the same level as we marked. We can put the levels here. And we can see it's a magnet area. Sorry, this, and I forgot one more cycle, this. Very strong area. It's still there and still could provide a retracer. The divergence is gone at that moment, but we don't have lower low, so this remains under the hat of potential divergence to tick. The only way to get involved in that is if we have signs to the upside again. At that moment we are under bullish divergence, which turns to be fake convergence. Between the bigger spots, there is still potential of a bullish divergence with the moving averages. So the plan does not change. The lines and the levels do. By the break of this trend line, if happens, we are back to the bullish game. If not, our next level, the pair is heading as to the next full expansion of this special cycle, and the next level to watch out would be nothing but below 165. Okay, so that's straightforward. If we break above the trend line, we can discuss about the buys. If not, the pair is going to drop lower. We would sit on the fence watching for the next opportunity. This one failed for us. The break for the trend line, failed to deliver. What's next on our list? Euro versus the Canadian. So first of all, before that, the dollar yen changes the directions. We are done with the sells, looking for possible buys. Where is it? Okay, the next one, Euro versus the Canadian. So previous week we moved neutral after we got this straight retrace to the upside. In one leg through all the Fibonacci's. This is a warning sign until we get clearer picture. The longer term view of ours remains still bearish. So we expected two waves here, which also should be a duplication of that. It looks still bearish. None of the highs are broken. We're still holding the lower highs. And we are now going one straight leg below 61.8 Fibonacci in the rally, which makes it a very volatile movement, but keep it under the bearish head. The lower highs and the lower low structure remains on. So as long as this structure of the lower highs remains on, the pair is expected to go to the bearish movement, and sell the rallies would be our plan. Okay, this is it for the EuroCAD. Where are we heading? We have to put the cycles in play. As you can see, 147.80 at least. Full expansion could be very much further, and the daily expansion would be all the way to the same zone. So it seems like there is room to go. So the rallies would be a good plan for this pair. This is the first one. The second one, CAD franc. Also, we've been in a neutral mode after the failure of this trendline breakout in the previous week. We've been waiting for the next opportunity, and the next opportunity might be arriving right here. So we are still under the head of two waves from the big daily chart, and the last divergence in play is bullish. Last trend line in the daily view is bullish. 4 hour does not have anything better to suggest us, so by the break we are back to bullish. Break above the trend line should be the one that opens us the opportunities. And why are we bullish from the very beginning? Due to this cycle, the expectations are for two-wave correction. Simple as that. Weekly has not much to assist. It has nothing again though. Game over. We are bullish. So break of this trend line should be the place to open the doors for buy retraces. Okay. This is the CAD franc. Discussed. So just make sure you didn't miss anything. Oh, Aussie dollar also comes in play. So what do we have on the Aussie dollar? And with the continuation, it expands the divergence. The daily is a cycle by itself on the last leg. False breakout comes in play. Trend line is breaking up. Aussie dollar becomes bullish for us. And the last one on the, by the way, as per the cycles, we expect two waves or a range on a daily. So this or this doesn't change anything of our view, which will be bullish. And the last one is the oil. Now we do not have a cycle in play here, so it still belongs to the one coming from the weekly. We had in this rally kind of one straight move correction. That could still make the two waves or can still develop any sort of a range. As per the daily, again, it does not have any certain cycles, but it does have this trend line for us and a bearish hidden divergence. So look what happens in terms of divergences. Bearish is the last divergence from the weekly. Bearish now is the last divergence from the daily. And the 4 hour chart starts to make a beautiful divergence by itself. This is the most recent rising trend line that we have here. 1 hour chart suggests a slowdown with its false breakouts. We never faced any good lower low yet. Therefore, this is the most current low available on the chart, and together with the rising trend line from the 4 hour chart, if this is broken, the expectations are bearish. Since we do not have obvious cycles level in play that we can rely on expansion or on correction, the one to refer to would be the short term. And according to the structure the 4 hour has, this would be the zone. So 4 hour with 1 hour combos. What do we need to see happen here? A break of the trend line and a break of the most recent low from the 1 hour chart. That should be the one. I went too deep here. That should be the one that would be alerting of a possible bearish reaction. Again, wrong button. Okay, so to sum it up, we have the dollar yen change in the direction, euro cat franc, Aussie dollar, and oil starting to show up. A very nice opportunity. Indices are still not clear from my point of view. Don't see much there yet. Waiting for clearer opportunities to come. Very important update was coming about the investment. So we have the investment report available for you, of course, in the report session, also sent by email. The last report was on 13th of May. We had 2 positions there. One of them was the coffee that triggered us at the 98 retrace. We are now creating higher highs and higher lows, so stop loss to break even, risk free on this invest. And one that has to be removed at that moment is the pound versus the kiwi. Not because I don't think this would be turning around soon, because the wave currently, which is supposed to be slower, becomes very impulsive. Warning sign. Would be waiting for clear opportunity. So the pending order we had in 189 at that moment is removed, and we are going here as for now on the neutral. And the natural gas, you received update from me here about it 2 days ago. It missed 1 point from the 210 entry we were following. If you are in, perfect. For all those who contacted me to ask about that, again, hold the positions. For those who are not, the break of the trend line should be a good sign for the reversal we are expecting. This is as per the invest, and that's pretty much it for today. Straightforward from the running positions to the new positions. If you have any questions now, guys, it's your turn. Ahmed, daily, the pound franc, we are building up the divergence, but again, it's yet only a potential. We still miss a clear, no, actually the magnet zone is building up right now. Yeah, it's improving. It's improving. We do want to see the higher high structure, or at least trendline breakout structure, to start talking about a possible bullish beginning, assuming it's holding this bottom of the range. Yeah, let's see. It starts finally to look interesting and potential. I agree. Waiting for things to become official. Any other questions, guys? Anything else you would want me to clarify? Pound cut, explained, Ederson. Pound cut failed in the first opportunity, right? This one. Now the other one, this is the level we have. Yeah, that's the level. Still there. That's the same 165 I was talking about, right? If we don't break this trend line, the new trend line is from a place that 2 candles rule does not respect. I assume you refer to this one? Yeah, so that's what I explained on the Monday session. When you face the 2 candles rule idea from its very beginning was to filter what we call non-moves, right? That's the purpose of 2 candles, to filter things like that for you, without volumes, without movement. This came in two-wave structure here. So the move inside, yes, the two candles was missing, but again, the whole principle of the two candles is always to filter what we cannot work with and what we should not work with. Things like that, for example, that do not change anything, do not come with any clear two waves. In that case, sorry, here. In that case, you received here a clear two waves, 1, 2. So once again, yes, no two candles, but the reaction came in two waves, and this means the market is, well, not the market, the waves are healthy, coming with a money flow. Okay. Any other questions? You are very welcome. You are very welcome. Any other questions, guys? Any other thing you want to clarify? If so, please. And again, as always, I say when you ask, I can direct the question, the answer correctly. If you don't ask, I try to explain all the things, but not always it's possible. Stefan, Euro franc. If you are asking for my direction, okay, so the reason it's not yet in my list, the weekly divergence did not tick yet to the upside, so daily only potentially to tick right now, right? It's only yet a possibility. For that to form, we required any false breakout with higher highs, which we currently are missing, and we're stuck in sort of consolidation with a potential bearish hidden divergence developing against us. No higher highs, no trendline breakouts, no structure of 3 higher highs, higher lows. Too early to make a call on this one. This is the reason why I'm still out of that. It looks like a potential to follow, I agree, but it's way before anything we can work with. Perfect. So guys, once again, thank you very much for attending to the live sessions. The recording would be uploaded as soon as the video is up on the servers, and the trading report would be sent as it's ready. I'll see you in the telegrams. Thank you very much for being here. Enjoy the trades as they are going, and pay attention to the new ones developing. Ciao for now. See you around.